Well, let me ask you a question about this. Do you own something or have some loved one in your life that is worth more to you than they are to someone else?
I would say yes.
Yeah, everybody would answer yes to that because you have something that you own, a collectible item, or not that you own them, but a person, like a child or a pet, maybe an animal that you love so much, but a stranger doesn't love them, right? They're not worth anything to them. They're just another dog or person, it's no big deal, right? But they're special to you, right? And so the thing people have to understand is this is critically important. Critical thing I'm about to say, super important. Certain assets are worth more to the people that own them than they are to the people that might buy them. Why is that important? Because it causes hoarding. And these properties with these low mortgages that are not transferable to a new buyer are worth more to the people that have them than the house. So here's an example. If someone has a house that's worth $500,000 and it has a mortgage at 3% interest, that mortgage is part of the asset. But upon sale, the buyer doesn't get that asset. In fact, the asset evaporates into thin air. So the seller loses the asset, but the buyer won't pay more for that asset because they don't get it. It doesn't transfer. There's something called a due on sale clause, which, the Supreme Court upheld decades ago. So the mortgage does not transfer to the new buyer. It's gone. So this causes hoarding. And this is exactly the market we're in right now, where so many people, millions and millions of people, have these incredibly cheap mortgages and they just don't want to part with them. They don't want to sell the properties. And if you want to have a real estate crash that some are predicting, there is one critical ingredient that you must have to have a real estate crash. And that is a massive number of tens of millions of distressed homeowners. We don't have that. In fact, we're not even close to having that. We are so far away from that that we may be the furthest away from that idea that we have ever been in history. Let me tell you one more thing. This chart is the most important chart in real estate that's up on the screen, is showing you the interest rates of existing mortgages. But you can't hear the dogs that don't bark. There's a dog here that isn't barking because you don't see it on the screen. And here's the dog. 43% of all homes in the country have no mortgage at all. Those people are pretty unlikely to go into distress because they have no mortgage. These people, 65% of them with mortgages below 4%, they've got an incredible bargain. And another 24% below 3% have an even better bargain. They're very unlikely to encounter any distress. So let's look at the foreclosure rate. Typically, at any time, just typically throughout recessions and boom times, of all mortgages existing at any given time, about 1% of all the mortgages will be in some stage of default. Someone is 30 days late on their payment, someone is 60 or 90 days late on their payment, or someone is entered into the foreclosure process where a notice of default has been filed and the lender is getting serious about taking the property back. Some are the day before foreclosure where, the only way to rescue the house is at the courthouse steps, right? All different stages of default. Typically, about 1% of all mortgages are in some stage of default. Right now, only 0.5% of all mortgages are in some stage of default. But wait, there's more, because that doesn't even give you all the information. What's important to understand is, say, for example, we look back at 2008 during the Great Recession. At that time, the default rate increased and the foreclosure rate increased, and times were obviously very difficult. But what was different then, significantly different, is that the ability for that homeowner to get themselves out of the default had evaporated. It just wasn't there. But right now, it's very different. The likelihood of these 0.5%, which is half of the normal rate, actually going all the way through to foreclosure is extremely low. Because if they simply put their house up for sale at any reasonable price, it's probably going to sell. Now, the market certainly isn't as hot as it used to be, and sales volume is much lower than it used to be, about 35, 37% in some areas, at the worst areas. Now, in some areas, it's not that bad, and sales volume is chugging along, but it's still lower than before.